Hello and welcome to KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. Well, today we are taking a look at CenturyPly boards. Now, this is an interesting company that we've been talking about. Well, in general, let me start by telling you about what this company does. And as you may have guessed, it's into plyboards. It's in fact India's largest listed plywood manufacturer and has a market share of around 25% at the moment in the organized market. It is also the one with the largest market capitalization in the listed space at the moment and was the third largest laminate producer in India right now. Now, over the last few years, it has added about adjacent businesses like MDF and particle boards, and it seems like it's also been a little bit of a trend as far as the whole sector is concerned. Owning into that particular trend, we have a new integrated factory in Andhra Pradesh to propel growth in export markets as well. And the last few years have certainly been one in which we've seen a lot of traction in plywood companies in general. And CenturyPly boards, being one of the leading companies here, is going to be an important one to keep an eye on. Now, before we move on, let me give you an idea about the segmental breakup. Now, firstly, as I was mentioning, you have plywood, which forms a bulk of the revenues for the company. Well, we saw about a 7% growth in FY24, but the overall top line standing at around 2,100 odd crores annually. That's followed by the second largest segment, that's MDF. And MDF, as I've mentioned, there's a lot of companies moving into this because it does seem like, a lot of, the consumables now are also, tilting towards MDF. That's the second largest segment for the company as well. Laminates make up for the third largest, and of course particle boards along with the others form a significant chunk of the others bit. But overall, plywood still is the mainstay of the company, as you can see here, and MDF perhaps is the fastest growing segment for the company, once again, which is very evident. Now, as usual, what we take a look at is the fundamentals of the company. We rate the company based on revenues. We talk about your income statement. We talk about your profitability. We talk about balance sheet and cash flows as well. And along with that, we apply return ratios on a handful of these financial statements and give you an idea about how the company has done so far. We move on beyond that. We talk about shareholding, how the price action has been for the stock, valuations, as well as street coverage. Now, to take us through some of these aspects, I am also joined by my colleague Puneet Jhaveri, who's going to also help us elucidate a little bit more in terms of how the company has panned out. So, Puneet, thanks for joining in. Let's start off with how your top line, your margins, and your bottom line have panned out for the company.
Well, definitely, good morning to you as well. So definitely, as you rightly mentioned, it's the largest, plyboard manufacturer, and that's looking at it in numbers as well. So for FY24, the revenues were at roughly about 3,886 crores. Now, over the last 3 years, it has steadily increased at a 22% CAGR, and hence it's a key beneficiary of being one of the largest in the organized market. Now, that has translated into EBITDA as well as profits, while not at the same pace, but definitely in the mid-teens. So 16 to 19% for the EBITDA growth that we've seen, and margins also have remained stable at around 13 to 14% for something like a Century over the last 3 to 4 years, definitely post the pandemic as well. And while there has been some raw material pressure, the company has been able to maintain those kind of mid-teen margins. So definitely it's a big thumbs up on the income statement side at least.
So, pretty steady growth is what we are seeing right now in terms of demand, clearly being in supportive of the top line growth, and that's naturally led to the kind of traction that we've seen in profitability as well. But we'll talk about the balance sheet. Does that mean that it has had a positive impact on the balance sheet? Yes. Naturally, if your profitability is going to grow, your net worth is also going to move in line with that because you tend to accumulate those kind of movements and those profits in your balance sheet. So your shareholders' reserves stand at a little over 2,200 crores at the end of the second quarter of FY25. Besides that, you have cash and cash equivalents of around 37 odd crores. But overall, given the fact that you don't have too much debt on the books, it's marginal, it's negligible, and you have a reasonable amount of cash on your books, again, comfortably, comfortably positioned at the moment as far as the balance sheet is concerned as well. So we're going to give this one a thumbs up as well. Puneet, how are cash flows looking?
Now, this is where it gets a little interesting on the cash flow aspect, because the cash flow from operations have actually fallen from the previous year considerably. So for FY24, it's coming at 252 crores. For FY23, it was roughly at about 438 crores. So that's definitely been one of the key impacts, and that has been across the industry. For all listed players, we've seen that impact, and one of the key reasons is the higher raw materials or the timber prices. That has impacted EBITDA margins. So while for FY24, we did see 13% EBITDA margins being maintained across the quarters, in this 9 months, we have seen that impact on financials as well as profitability. And that's been one of the worrying factors, because the raw material space as well as the demand has been one of the key factors to watch out for. And raw material has not been in favor. So definitely the cash flow from operation has fallen. But since the company is the largest player in this aspect, they have been able to maintain the net cash flow at the positive aspect of about 27 crores. And it's the first time over the last 3 to 4 years since FY21 that the net cash flow numbers has actually come in positive, and a considerable number of 27 crores. So this, while the demand environment and the raw material prices has been, impacting the financial as a whole, I think, the net cash flow number has been one of the savings ratios. So although the cash flow from operation has fallen, which is a negative, we've given this a neutral rating because of the strong net cash flow generation that the company has been able to do in the last 9 months specifically.
Okay, fair enough. So, moving on, let's take a look at the return ratios. So you have a very strong income statement. You have a pretty steady balance sheet. Your cash flows are not looking bad either. While we were on the fence of whether or not to give this one a thumbs up or a neutral. But let's talk about the return ratios, and they do look good. About 21% return on equity. And a ballpark number to work around with an ROE and an ROCE is around 20 to 25%. Its ROCE that's 25%. So it's certainly not bad in terms of these particular return ratios, and I'd reckon that shareholders would be pretty happy with that. And that's perhaps one of the reasons why we may have slightly elevated valuations. We'll talk about that as well in just a bit. But, this is as far as your key financial statements go, and a handful of return ratios that come about on account of those financial statements. Let's look beyond how things have panned out. And, Puneet, let's talk about how we're seeing the returns for this particular company.
Well, definitely. I think, there are two aspects now that we want to cover: shareholdings as well as the street cred as well. So one of the key aspects now, let's first look at the shareholding first, if we can pull that up. Shareholding has been kind of stagnant at, for the promoter level, 72.6%, and that's why we've given it a thumbs up. We've just seen some marginal selling in terms of the public shareholding down by roughly 60 basis points, while the DIs have taken some stake here. Now, there has been some, interest in terms of the, asset managers. So Kotak, DSP, Mirror Asset, as well as ICICI Prudential have shown some interest. And that's why we've seen that kind of shareholding increase in terms of the DIs. But of course, over the last 1 year or so, the stock performance hasn't been, too great. And I think you can talk about that.
So the returns certainly have not been up to the mark. In fact, the stock has come off by around 3% in the last 1 year. And this is against the comparable mid-cap index, which has, shed by nearly, but not shed, but maybe it's up around 5.8%. So there has been a relative underperformance as far as in comparison to the mid-cap index. We were considering taking a look at what the stock has done over the last 5 years. And over the last 5 years, it has seen a 181% return. Yes, it is a multi-bagger, but if you look at your overall universe of the stocks which are of this size, well, a lot of stocks have done, better than about 181% in the last 5 years. Some have seen significant gains, much over 181%, which is why, at least as far as your returns are concerned at the moment, given the fact that in the last 1 year, the last 4 months have particularly been challenging for the entire mid-cap universe, we're going to give it a thumbs down because the returns have not exactly been, desirable. So that's as far as your street credentials go. Now let's talk about valuations given the kind of movement in stocks that we've seen, Puneet?
Yes, definitely. And you mentioned at the start of the show, this is the largest player in terms of market cap in this aspect. And while the trailing multiple has been, somewhat, very expensive side, roughly about 80 times price to earning multiple, across the industry, we've seen that high number, and not because the share price have increased, but actually the denominator, the earnings have actually fallen over the last 3 to 4 quarters, and that's impacting the overall the price to earning multiple. Now, the key aspect to watch out for will be forward guidance, because the company has been mentioning that the outlook for next year is something that they are positive on, and hence the forward valuations will be something to watch out for in terms of all these players. But because it's a commodity business and a lot of the raw material gets imported in the country, there will be that aspect of how much a multiple increase can a stock like Century see over the next few months and few quarters as well. And the company has been mentioning that raw material prices have been improving, and the MDF segment is expected to see something better over the next 3 to 4 quarters. Well, you see the valuations of something like a green lamp as well as the green panel also above 50, and a similar factor that the earnings have not come in over the last 3 to 4 quarters. While something like a Stylam industry, which is still a relatively small player, just roughly about 3,000 crores in terms of market cap, has a lower price to earning multiple. It still has a long way to go in terms of establishing itself as one of the key aspects. But overall, Agam, the valuations is something, which is a tricky aspect for a business like this, because the earnings growth hasn't been there over the last 3 quarters, and hence the elevated multiples.
Yes, absolutely. And, given the kind of earnings that we've seen in the last 3 quarters, I reckon that at this point in time, analysts potentially are still penciling in strong growth, or rather strong for the growth to pick up over the span of the next few quarters, which is why we're looking at that price to earnings ratio, which is being given to the company. But I look at the street coverage, and at the moment, if you consider the total number of analysts, which is 24 on the street, 12 analysts do have a buy. Another 8 analysts have a hold on this company. So when it comes to neutral to, positive territory, that's the majority of your analysts. There are 4 analysts who have a sell on the company. And the potential target, if you consider the average of all your targets, that entails an upside of 14% from current market levels. But because of the fact that we have 12 buys and another balance 12 hold or sell, we'll give this particular parameter a neutral rating. So that brings us to an overall score, and let's take a look at all the factors that we've taken into consideration. So, strong growth is what the company has seen. Very strong footing as far as the balance sheet is concerned. Cash flows, of course, in neutral territory for reasons. Very good return ratios as well. So as far as your income statement is concerned, and your financial statements go pretty good. And in terms of shareholding, a very well-held company as well, institutional as well as promoter holding right out there. The returns have not been the best, and valuations based on the kind of returns too, well, questionable. But street coverage, again, it's a neutral. So that brings us a total score of around 5 out of 8. We do have the management waiting by for us to speak to them. But before I get the management in, a very quick look at the SWOT analysis. So I'm going to tell you about the strength. So the strength, of course, is that it is the largest player in the sector right now, and it has about 25% market share in the organized market particularly. It's also India's 3rd largest laminate producer, and this particular positioning also bodes well with the company. In terms of the weakness, high timber prices do at times influence profitability, as you can expect. And the MDF segment has been a little bit of a drag on your overall earnings. But opportunities and threats, Puneet.
Well, definitely. They have a new facility in Andhra Pradesh that has come up, and while the utilization levels have increased and increasing over the last couple of quarters, I think this is major for the company in terms of the export growth, and hence it will be one of the key opportunities to watch out for. BIS standards, again, now, it is a standard Bureau of Investigation where the company, where the government has set some standards for the organized market in terms of, the kind of products that can come in the market, and that has not been implemented for these segments, and that has been a key drag for the listed organized players. So definitely implementation of the BI standard was delayed. It was expected to come in the start of this year. It has not, and now has been delayed by the end of the year. Implementation of that will be one of the key pivots to watch out for, and we'll speak to the management about that aspect. While on the threats, of course, we mentioned that the weakness has been the timber prices and raw material impacting future earnings is one of the key negatives to watch out for as well as a threat. And the forex volatility has been something to watch out for as well, because a lot of the raw material is imported in the country. So overall, that could be one of the key threats to margins to watch out for as well.
Okay, I reckon that's on that note, let's get in the management of the company. We have Keshav Bhajanka. He's the Executive Director at CenturyPly Boards India, who joins us on the show. Good afternoon to you, Keshav, and thanks so much for joining in. Keshav, we've spoken a lot about the company and how things have panned out, and so far, at least in terms of your fundamentals, they do look good. But the question really is, and perhaps a little bit of a concern, is the outlook for the entire sector. So if you could give us an understanding of currently the demand environment and the pricing environment for the sector, I reckon that we could perhaps draw a parallel here, because you guys are also the largest player. What can you tell us about this?
Good morning. Thank you so much for having me on the show. I think that, if you look at our company, if you look at the sector in general, this is definitely going to be a growth sector. Because, as you know, whether it is China, whether it was the US, all these countries, a period of prolonged economic growth that started with the boom in the residential real estate or the housing industry. India is likely to follow along similar lines, and we are still at a very nascent stage as far as our industry is concerned. If you put together all panel products, I think our total market size would be about 30,000 crores. And considering 140 crore population, that is less than 200 rupees per person being spent, or 200 rupees per capita being spent on panel products. So this figure is untenable, and it is perhaps less than a minuscule fraction of what is being spent in developed countries. Going forward, I think the industry is going to do fairly well. And it is based on this confidence, and it is on this belief that we have undertaken substantial capex over the course of the last 3 to 4 years. If you look at our total capital employed in the year 2000, I think our total capex would have been less than 1,000 crores. And post that, we have invested close to 2,000 crores more. So this is based on the belief that, yes, the market is growing. We as marketers are increasing market share month after month, year after year. And going forward, I'm sure we're going to see a strong performance across all segments.
Bhajanka, good morning, and thank you so much for joining us today. It's Puneet this side. I just wanted to understand, in terms of segmental, you are present across 3 to 4 segments, and we've spoken about that in the past as well. Just wanted to understand what's the current environment, because your MDF segment has been growing at a very faster clip, but that has also been impacting margins because of raw material prices. I want to just understand your view currently on the market in terms of raw material prices for timber. Where are they expected to be currently from the previous quarter? I think the last time we spoke, it had increased in Q2 to roughly about 8.5 rupees. Is there somewhere where it's been, or it's one of the key aspects, because you have expecting a 40% revenue growth in MDF for FY25. So any kind of outlook on that aspect?
Good morning, Puneet. I think that in terms of the raw material pressure, it was definitely there till very recently. The price of raw material, particularly in our new unit in Andhra Pradesh, when we had started conceptualizing the unit maybe 2.5 years ago, the raw material price was 3 rupees per kg. And today the timber prices have shot to 7 rupees a kg. There has been a drastic or a substantial increase that has taken place. But now I think that there is a little bit of equilibrium there. Prices aren't reducing, but at the same time, they don't seem to be increasing further, which bodes very well for us going forward. As far as margins are concerned, you see, this is not the first time that raw material prices have increased for MDF. This has happened in the past as well. But normally we're in a position to pass on this price increase to the market. It's not an absolute commodity. Today, a brand or the brand plays a big role in the ability to sell MDF, plywood, and other products in our category. Because of that, we have always been able to maintain margins. However, currently there is a supply glut, and that has also been exaggerated by a steady inflow of imports into India. with BIS coming into effect this month, the import part of it should be tackled, because the reason the imports were doing well was because the quality was far inferior compared to what we domestic manufacturers were making. Now, with regards to supply glut, as you have seen, the rate of growth for us in MDF has been quite good. I think last quarter volume growth would have been in excess of 70% or so. So I think that going forward, as the industry grows and we head back towards equilibrium, we'll be able to pass on a substantial part of these raw material price increases back in the form of price increase. And once that happens, we should be able to move back to a 20% plus EBITDA return.
Ms. Bhajanka, just one follow-up. So in that aspect, you're mentioning that demand has been weak over the last 2 to 3 quarters, while the raw material prices have been high. So you weren't able to pass that on, and you are expecting that you will be able to do that over the next few quarters. Just one aspect that, in terms of, the EBITDA margins, do you think that that will be driven largely by the MDF and the timber price segment? Because that seems to be one of the key drags. And also just one follow-up question on the Forex as well, because we have seen the company reporting, losses in terms of the Forex aspect, and that's because of rupee depreciation. Just wanted to understand what is the kind of percentage that's hedged for you specifically, because that has been impacting the quarterly financials as well. So just these 2 questions specifically.
Yeah, so getting back to your first question, I don't think demand is a challenge. Demand for MDF has been growing steadily. The supply glut is because there has been a substantial capacity addition over the course of the past year. The industry size has increased by greater than 50% in one single year. So that has led to this imbalance between demand and supply. The demand for MDF has been growing steadily. If you look at it as an industry, then the overall market has grown and continues to grow at a quite good click. But this supply, the additional supply that has hit the market, for that to be absorbed takes some time. To come up with a new capacity also takes time, and for that capacity to be absorbed also takes time. But going forward, I don't think there's too much of capacity addition taking place. Hence, I feel that this supply that has been created will be absorbed sooner rather than later, and margins will start moving up. Having said that, definitely premiumization does play a role. We have been able to steadily increase our penetration of premium products, which leads to higher EBITDA margin profile for us as well. So I hope that answered your first question. On the second question, since the year 2004, we have steadily had a policy of not hedging our Forex. And the reason behind this is that while the rupee continues to depreciate, the pace of depreciation normally is lower than the hedging cost or the premium that we are paying to hedge. So because of that, we leave our Forex exposure unhedged.
Okay. But Keshav, at some point in time, I'm sure that you'd want to consider rethinking your hedging strategy, or rather the lack of hedging strategy? Or do you think that at this point in time, you want to continue with the way things are right now?
I think, our Forex exposure is not a substantial part of our balance sheet in any case.
Right.
We have a natural hedge in the form of close to 150 to 200 crores of laminate that we are currently exporting. So I think that it is not a big strain on our balance sheet. But you are right, there has been volatility. However, if you take a long-term perspective, because we are not in this industry for a year or two, it has been proven better for us to leave this exposure unhedged rather than pay the Forex hedging cost. As of now, the policy is clear. We are going to leave this unhedged. The natural hedge in the form of exports, that is there. But other than that, there's no direct hedging that we're doing.
No, fair enough, Keshav, take your point. A final question from my end is on your export markets. You've already put up a facility in order to cater for those. Can you tell us a little bit more about your plans here?
Sure. The product that we export, or the most substantial part of our exports, is in the form of laminates. Now, in laminates, till now, we are restricted by size constraint. What that means is that all our presses were 8 by 4 feet, whereas the export market requires different sizes, which is a 10 by 4 quarter, a 10 feet by 4.25 feet, and a 14 by 6 feet. Now, these two sizes, we finally have operational in our new Andhra plant. And with these, we have been able to enter into newer markets, which till now we have never been present in. For instance, the European market, for instance, Australia, so for instance, Israel. So we've been able to add a lot of markets. And going forward, we are very bullish on growth in this segment. I think that we have been handicapped by the delay in the facility coming up, but now we're in a good position to capitalize on the strong demand in exports for HPM as well.
Okay, Keshav, we'll leave it at that. Thank you so much for joining us here and talking to us here on NDTV-Profit.
Thank you so much.
Well, there you have it. That's the management of, well, CenturyPly telling us about how things could potentially pan out. They're not concerned about demand for sure. There's a little bit of a supply challenge at the moment, but besides that, they're still expecting the industry to grow well. Well, Puneet, thank you for joining us as well, taking us through some of that. And on that note, we are at the end of this edition of KYC. But don't go anywhere. Lots more lined up. Stay tuned to NDTV-Profit.